Okay, traders, today is Thursday, June 20th, 2013. This is video number 1036. It is midday on Thursday, and I'd like to welcome all of you to our latest edition of Short-Term Trading Live with Oscar Carboni. We are going to get right into this because it is extremely important that we see what's going on out there. We know that futures trading is extremely risky and can cause substantial financial loss. On a day like today, it can cause absolute death to your trading accounts. Always use protective stops. This game is not for novices or people who don't get the risk. All right, traders, what are we looking at? We are looking at the NASDAQ, and it's a daily bar chart. NASDAQ daily bar chart. I put this before your eyes in a video 2 nights ago and said, let's first of all remove today. I said, is this, and 2 days ago, is this a breakout? And we put a question mark next to it. Do we have a breakout of a bull flag? This is obviously a bull flag. Is this a breakout? So we went up for 1 day over the flag. Second day, I thought, all right, we got a good breakout. Let's see what's going to happen. And boom, this is what happens next. There is no breakout. That has not existed. That was a false pop out of the top of that flag. And this market does not look good short-term, traders. This is now, as simple as it looks, is probably going to create some sort of a trend in this direction for a little while. And maybe at least to the bottom of the flag here. We'll see. The flag extends out. Let's see. I mean, there could be support down around 2850, but that's a long way from where we are now, which is 2900. So you do have that going on. Then if you remove this, you will find some traders that are going to come in and say, well, what about this? Wouldn't you call this almost a triple bottom? I don't want to call that a triple anything, traders. I say watch out for this market at least today and tomorrow, but we will take it 1 day at a time. Now, this video was going to come out last night. Traders, my apologies. You know I work every hour of the week. I stay up so many hours. I passed out last night, sometime Wednesday night, and I never had a chance to do this video for you. I did put a recommendation on the Omni to go short NASDAQ and S&P, so the Omni had this peg, but I was not able to produce this video for you last night. My apologies, OmniX. Today we'll do it live together, and we'll watch this video and watch the class, and hopefully we'll gain from it. So here we are in the NASDAQ, looking terrible on the daily. You know, when you take the NASDAQ out to a weekly, however, it's not as insanely ugly. Let's get rid of some of the stuff on here and just take a look at it. It's not as ugly as the daily, but it's not beautiful either, because you can come down a little bit. I mean, you got some room to come down here now. Now that they're on the run, you absolutely have a little bit of room to come down. So it's not the worst looking chart in the world, but there does look like there's some room on the downside, and I have a feeling they are going to extend this a little more and get down there. We don't want to see them all the way down here. We wouldn't mind seeing them here. Let's see what happens. So that's your NASDAQ. This, my friends, is the S&P. Now, the S&P on a daily is more scary, if you ask me, for this reason. You take this newly forming parallel channel out of the way, and what you had was a very nice parallel channel for quite some time. An expansion of volatility. Whoosh, a swoon down. Another expansion of volatility taking place. But here is what I don't like. I don't like this. You have to expect stops to be here, and I'll tell you why. You got to expect sell stops to be down here. Why? Because the last time down it held, and today it's down there again, but look at on the way up. Refused, and when it got above, it was a big move. This area has to have stops in it. It has to. I don't think the market has a choice. Traders put stops where they think they're going to run into trouble. Here is your trouble area. So being that we're here now, we're about to run into where those stops get ran, and I think they run them. Then there's this. Look at this big parallel trend line. Big, huge parallel channel. We tested it, got above it, but it couldn't hold, came back down, and are now under it, and then add this parallel channel. You stayed in this parallel channel, you got above it for a little while, for 2 days, like the NASDAQ, looking happy, and boom, crashing back down. There are stops below these 3 lows, traders. Look at these right here. There's got to be stops building here. There's got to be stops building right here, and we are starting to nose our way into those stops right now. And you know what? I would think that first they'll hit them, then the street will get really, really panicky, and then the bottom for this move will probably come in. Now, we are in a big bull market, traders. It starts down here. It goes all the way up here. We are not in a bear market. However, bear markets, bull markets, they have pullbacks. A bear will rally sometimes. A bull will come off sometimes. But this time that it's coming off is slightly longer. It has been for about a week in May and all of June, except for a couple of days. We have been coming down. I mean, it's been 3 solid weeks of down movement with a couple of up days and right back into the down movement. When you look at the chart in this fashion and you expect stops to be down here, you know, I'm not the only person that sees this, traders. There's going to have to be stops there. So I'm a little worried the S&P now has to wash out the stops underneath if it is going to show us that it remains bullish. Now, traders, you know me, I don't care, bull market, bear market. If it moves, we become that. If I need to be a bull, Omni's a bull. If it needs to be a bear, Omni's a bear. We have been selling this S&P for days now, or at least trying to. I haven't been trying to buy into this. I know better. If it looks bearish, it becomes bearish. So that's your NASDAQ, S&P, but I didn't show you the weekly S&P. Look at this. Traders, on your weekly S&P, again, we're not in terrible shape. This goes all the way back to the crash lows of 666 in 2009. This red channel shows us that we've been in fantastic support. Then you have this blue secondary channel. The blue secondary channel, once again, shows you've got great support. Then you've got this channel. But when you blow it up, you're starting to test this channel now. See the red channel here? You're starting to test it now. That's a little scary on a weekly because a weekly is quite meaningful. Then if you really want to take a look at this, why wouldn't we be calling this a bear flag on the weekly? Because in all honesty, we should be. Bear flag starting to form on the weekly. So as much as a bull as I would like to be, I'm not blind. This thing starts to go down. So do we. We turn around and start selling. I don't care which way it goes, to be honest. I'd like to see it go up because 401ks can use it, but what do I care? I'm a trader. Up, down, just move, please. So that's your ES, that's your NASDAQ, and in all honesty, this is not June anymore, but the June shows better bars. It's the September U contract. So that's your NASDAQ, that's your S&P on a weekly. Now, traders, on this chart, it starts to get a little funky. This chart, if you recall in my last video, I showed to you and I said, as much of a bull as I'd like to be, this is the only contra chart I am going to show you. This chart is beginning to tell me that we may have a problem in the market. Does everyone remember this chart from my last video? These 2 days didn't exist. And I said, look, here's what I don't like about this chart. I absolutely have shown you bullish charts in my video, the one right before this one. Then I brought up this chart and I said, this chart is the only one that's got me going a little bit. And we got to keep our eyes on it. Keep this in the back of your head. If you recall, that was in my last video right before this one. And here is what happens. I looked at this chart and said, well, a head and shoulders that's small is a continuation pattern in a bull market, right? It is simply a continuation pattern when you're in a bull market, a small head and shoulders, right? It runs up, it has a little dip and continues. But when you start to get multiple head and shoulders coming together, that's another story. Now, if you look, 1, 2, 3, 4. 4 of them right there. And if you wanted to play games with this one, you can eke this one out as an inverted shoulder, head, shoulder. So they're starting to come together. Lots and lots and lots of head and shoulders, whether they're inverted or upright, they're gathering together. I don't like when I see that. Then you've got this, which makes it even slightly scarier. Now we've got this happening. The whole darn thing is starting to turn out to be a big head and shoulders with a head and shoulders in the left shoulder, a head and shoulders in the head, plus an inverted head and shoulders building in the right shoulder. Traders, that's how markets top. This is how markets top. Scary, I know. I'm not expecting a top, but this is what happens when they do. So that's why I showed this chart to you 2 days ago. 2 days ago, when I showed this chart to you, I said, look, it's the only one that's got me worried, but it's got me worried. Now, here's what's happened in the past 2 days. We came out under the blue line, down and down. We came down a lot. Now, good, very good, Oli. If you remove all of this, you might actually have a big bear flag here. Even scarier. Look, so the tranny's starting to speak, and I'm a guy that listens right away. I don't care what anybody says. When I start to see a signal, I go for it. That's why we were trying to get short today. That's why we had sales at 1626 today in the S&P. Because when it wants to go down, I'm more than willing to play the game. So there's your leader. And it's ugly right now. I kid you not. This day does not help anybody at all in the bull camp. There's more. Traders, the Dow Jones Industrial Average. Fund managers use these pullbacks to put large amounts of money to work. See this pullback? It didn't last long. They came right in and bought it. You see this pullback? It didn't last long. They came right in and bought it. You see this one? It didn't even have a chance. And do you see this one? They came right in and bought the market. And if you look at these, 1, 2, 3, 4, 5, 6, 7, we went over this. It's about 12 days from start to finish, from the top to the bottom and back. It's about 12 days. Well, look at this one. I'm sorry. This is not 12 days. Look at the size of this line compared to this one, compared to this one, compared to this one, compared to that one. This, my friends, is something new beginning. I don't like this even slightly. Too long of a pullback now. You know, a short pullback right back into the bull, understandable, like when this one was working. Right back into the bull, I get it. But it didn't do that. It only gave us a reprieve and back down again. That's not exactly what we were hoping to see, traders. I kid you not. This is not the best development that could have happened here. We've been going down now for, and if you just use simple eyesight, a lot longer than any of the other pullbacks. So this is turning into more than just a slight pullback. Look at this one. DAXy, the German DAX. This is a problem. That's a breakaway gap. That's a runaway gap, if you will, right here. Why? Because not only did it break, did it gap, but then it went and settled at the lows. Well, near it anyway. It's still trading. That is a breakaway gap in the downside of the DAX. Yuck. You didn't want to see something like that happen, and this is, you know, it's fast developing stuff here. In fact, let's define this channel here. What is going on? Is there a channel even? There's not even a channel here yet. So it's just starting to fall apart. So what I will do is I'll just take something off the highs, and I'll drop it down here and just see at some point if that turns out to be support. Boom. That's about all I can find. You almost hit it now, but then you got tomorrow to deal with. So you can go lower. This looks like a breakaway gap. I am not liking the DAX today. That is for sure. Don't expect it to be good tomorrow either, but we will take it one day at a time. So you've seen U.S. indices and you see the DAX. And traders, yeah, it was looking good 2 days ago. I mean, let's face it. Remove. And what is wrong with this market from 2 days ago? Almost nothing. But then you add these simple 2 days in and everything changes. Bang, gap opens up, market falls apart, we deal with it. Now, let's get interesting. Traders, how about a round of applause for these calls in the precious metals this week? I mean, are you kidding me, Omni? This was put before your eyes before this day happened, before this day happened, before this day happened, and before this day happened. And I said, get ready. The big one is coming. I called several clients personally. I told everybody in the chat rooms that would listen. I did a video about it, which you can go look at right now. And I said, my best trade this week will be short gold. And this is what happened. Unbelievable. Go bear flags. I mean, does analysis work well or what? That wasn't the only thing that stopped this market, traders. Pure technical analysis. Look at this trend line right here. You draw a trend line. It goes all the way to the highs, by the way. It goes all the way back there to the highs. You draw the trend line and watch it bounce off and bounce off and bounce off and create a bear flag. And if you don't realize that's going down, you are not paying attention. Your gold has a long, long way to go in the gold. Let's look at the silver. Traders, once again, oh my goodness, does technical analysis work well or what? Look at this market. I put this chart in my video a couple of days ago and once again told you it's going to be a big, big mover. I drew the arrow, I drew the flag, and told you watch out silver and gold bugs, watch this video. And that's what I put in the email. Watch this video. Now, if you simply go like this, you'll see that the resistance is moving lower. And this market has a long way to go. Why? Because just like I showed you in the S&P and NASDAQ, stops turn up where you have 3 lows. So you have a low. You've got another low here. And guess what happens? You start taking out the stops when you get near it with your 3rd low. And that's what's happening now. It's the way it works. So silver, gold looking horrible. But let's look at more. Traders, the bond market. My goodness, look at this bond market. I showed you how many times that these are all bear flags, right? Bear flag here. Bear flag here. Let me just point them all out to you. There's so many on this chart. Bear flags are all over this chart. And the last thing I did a couple of days ago was show you this bear flag and said this one will unequivocally work. And look at what bonds have done since. Bear flag mania. And the bonds have fallen apart. Now there's more. The 10-year also tells a picture here. But I'm going to go out to December. I'm moving the 10 years out to the end of the year. I want you to see this chart. Traders, when you look at the 10-year notes on the weekly, goodbye to cheap 10-year interest rates. Goodbye. It is done. That is a top. Like the bonds are a top. Unequivocally, this thing goes down. Massive head and shoulders, rounding top tool fitting perfectly. The bond markets already showed it was going to break. I would imagine unless the stock market really tumbles here in the next few weeks and forces the Fed to come out and create a new way to prop up markets, the top is in bonds and 10-year notes. We've already called officially the top in gold at the price of $16.80. That was official. That's going even lower. We think bonds have topped, but remember, of all things, this picture. This is not the worst market in the world, but you are about to take out some stops here on the downside. You've done some already. You're probably going to do a few more. But, you know, traders, when you go out to the weeklies, just remember the world hasn't come to an end yet. Certainly the transportation average has shown us that there is a problem and we could have a downward summer, but it doesn't mean it is the end of our markets. It is simply a pullback in a rather bullish market. Again, if you look at the S&P, yeah, you're probably going to hit some stops around this arrow, but is that a top? You know, the tranny's starting to look that way. The S&P certainly does not. We take this one day at a time. We certainly never anticipate. We let the charts tell us what's going to happen, and then we trade that chart perspective. That is what this is all about. That's why I'm holding these classes, and that's why I would like to thank each and every one of you for showing up to today's class. I hope these classes help to keep you in tune with where markets are going. Traders, thank you so much. Take this one day at a time and always, always trade with stops. Remember, traders, the one good thing about stops is this is what they do for you. When you place your stops, it allows you to say something to yourself, and you should say it over and over again, and you know what that is. Stops are in. Emotions are out. Traders, watch out for the downside. Always trade with stops, but don't marry this downward projection. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.